Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a Forex quick look at the dollar versus yen. In the morning video, I spoke to the 145 level up here. That was the high price going back to September 7th and also September 14th. On this day right here, we saw the Bank of Japan come in and verbally intervene in the market, sending the price to the downside. In this day right here, this is the Bank of Japan day. We saw the Bank of Japan keep rates unchanged. Soon after, the Federal Reserve raised their rates by 75 basis points, and that combination sent the dollar versus yen to the downside here on the intervention. But then the fundamentals of the Bank of Japan keeping rates unchanged and the U.S. Raising rates started to take hold, and we saw the price start to move its way back toward the 100 and 200 hour moving averages, and that's where the price closed on Friday's trade, setting itself up for this week's whether the dollar would continue to be king or would we move to the downside. Well, the dollar was king in the first part of the week, with the price moving up toward the 145 level once again right here, and we found sellers here last night ahead of the Asian session. And the Asian session, they didn't want to mess around with it with the Bank of Japan around, so we saw sellers against the 145 level again, and we saw more selling into the New York session here as the dollar started to move to the downside and the corrective moves that we're seeing in the markets here today. So what next? Now the low price came right down to test a key target, a target that I've been talking about in the morning video and through the day, and that is the 100 hour moving average and the 200 hour moving average. Both those moving averages come in right here, the blue and the green line. 100 is the blue line, green line is a 200 hour moving average. And as you can see, the price bounced off the 100 hour moving average. Why? Because risk could be defined, risk can be limited. If you were to buy against the 100 hour moving average, where would your stop loss be? Well, probably somewhere below the 200 hour moving average. So you're risking this amount right here for the potential to move back higher. That's what the buyers are doing. And where would the resistance come against? Well, it would come against this old swing area right here, and which has a bunch of swing highs and lows going through here, and so it would be up to here. So you're risking this amount to make something more than that amount, okay? And that's the goal of traders. That's the goal of traders who lean against certain levels. They did the same thing up here, by the way, by selling against the 145 level and probably having a stop a little bit up here. So you're risking this amount to potentially make that amount. So it's the same game, just from a different perspective. So going forward, if the 100 and 200 hour moving average hold, we're going to look for a rotation back toward the 144.55 level in the short term. And if the price should not hold and start to go back below the 100 and 200 hour moving average, I expect further selling to the downside. So there you have it, a look at the dollar versus yen in a Forex quick look. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.